Hello, everyone. Thank you for joining us today. I wanted to tell you what's really important about today, and that is our special guests, because we have a fountain of knowledge between the two of these folks. So I'm so happy you were able to join. We have Angie, CEO of Fixed Assets Consulting, and Paul Chabin, who's joining us from B. Riley Advisory Services, and he is the Director of Development there. Angie, would you like to say a little something about yourself?
Yeah, thanks, Tony. So I've been eating, breathing, sleeping, dreaming of fixed assets for 26 years now. And I pretty much go into the realm of them of every aspect. So the complete life cycle from CapEx to CIP to in-service to updates and movement all the way to the death of them of disposal, transfer, or sale. And my clients range and experience range across all industries globally and so domestic and foreign with software implementation and automation as well.
So if you didn't get it from that, Angie is a real expert on fixed assets and a lover of it. So she's so amazing to hear from.
Thank you.
Paul, would you like to say a little something about yourself?
I told Angie this week that she was the GOAT, and she didn't know what that was, but I couldn't believe it. But she is the greatest of all time in fixed assets. So I am just a bit player in this presentation today, but I have also lots of experience. I don't even want to say how many years, maybe somewhere between 30 and 40. I forgot.
You're looking good, Paul.
Well, thank you. Now my head's not going to fit the screen. So I've been involved in all sorts of advisory services in and around fixed assets, including fixed asset management consulting, including property tax consulting, including property insurance, risk management, all kinds of different areas. And I'm here to kind of talk through that vast array of areas that I've touched across the enterprise, where fixed assets kind of touch the enterprise, and how that can be leveraged by perhaps some of you today.
So for today's agenda, first part of our webinar will cover key issues in fixed assets management for manufacturing specifically, also practical tips for effective fixed assets management. And then we'll do a question and wrap up portion as well. And now I will hand it over to Paul.
Thanks again, Tanya. I appreciate it. Very happy to be discussing this topic today. Like we alluded to, we've got a lot of experience to talk through this, and kind of a passion thing for Angie and I to talk about fixed asset management, since we have had so many years of experience with it. But what we really want to convey is that this isn't just an accounting concept. It's really something that should be leveraged, or it could be leveraged. And if you want to gain credibility within your organization, you might want to think about leveraging across the enterprise some of the knowledge that you have around fixed assets, so that you can add value to the organization.
Yeah. So with that, we're going to talk today about the 5 key challenges specifically in manufacturing. Done some research and in my own experience of not only implementing and consulting within manufacturers, but also being employed within the confines of a Fortune 500 global manufacturer for years, and seeing the struggles firsthand as a user as well as a consultant. The first one that we always see is asset tracking visibility of where these assets are located. Some of these manufacturers have been around for centuries and centuries, and sometimes even longer. And so sometimes it's good to see what they have. Depreciation, valuation, obviously, maintenance, repairs, compliance and audits, mostly about standardized reporting and processes. And then how do we integrate this information with the systems we have? And do we need any other additional systems like a third party? And how do we integrate those as a user within fixed assets realm? So these are the things we're going to dive into today, specifically, and how they go with manufacturers. So we'll start with tracking visibility. And Paul, do you want to kind of give them some ideas of things to think about first before we go into other challenges and how they can fix those with solutions?
Yeah, I mean, the key points are listed here. The first 2 bullets here are really important. I think that, everybody on here understands, again, the accounting of for assets is important, from the setup for depreciation and tracking the asset. But do we really focus on booking assets to maximize benefits? And there's all kinds of different areas, as I alluded to already, where benefits can be realized by just being more complete and accurate and standardized with respect to recording the data, i.e. creating that visibility, and then prioritizing in being good stewards for the fixed assets as they go throughout their life cycle. We in the accounting finance area tend to not necessarily get involved in the collaboration of where these assets end up, how they get changed, how they get eliminated, and therefore sometimes that can corrupt the accuracy of the books. So those are my two key takeaways for this visibility issue.
Yeah, well, when there's visibility, then and not only is it physically here, and we update our subledgers to reflect that, then that visibility spans across different locations and departments, correct, Paul? So like when we're talking about standardized reporting on this visibility, as long as they're booked in a subledger, we're not just talking about within the confines of finance, but we're also talking about insurance, appraisal studies, property tax reporting, maybe third-party reporting to auditors, CPAs that are outside of our organization, where everything, or treasury departments, where everything touches fixed assets. And if everything isn't tracked and has decent visibility across all of those, I like to call them arms, right? Like fixed assets like a spider, and it has all these different legs that attaches to fixed assets. So a lot of people kind of forget and lose sight of that, specifically too, from a tax perspective. So tracking this information is extremely important.
Yeah, there's no doubt. And again, I think enterprises, from my experience in working with different silos within an organization, is that they're all good at what they do, but sometimes they don't see the forest through the trees in terms of looking at assets holistically and being more efficient with the usage of the information. So I guess the point is that, and we've talked about this for so many years, about how important it is to have more of a central repository of information as opposed to just a fixed asset management database. And who manages that ultimately is the key issue. But to answer that question, you really got to have that collaboration between the silos to say, okay, what is our strategy for managing assets across the enterprise so that we can optimize the utilization of the assets, increase the ROI of those assets, mitigate costs, increase productivity, all that good stuff.
Yeah, and keep lines of communication open for sure, which is a struggle in most organizations, specifically manufacturing, because there's so many different people that touch an asset. Which brings us to depreciation and valuation, right? So depreciation, throughout my experience, my vast experience, I found that sometimes fixed assets get a bad play, meaning, nobody wants to talk about them, but everybody has them and everybody has to report. And I think I heard one time someone say, "What's the big deal, Angie? You just plug it in, press a button, and calculate some formula." And it's like, if only it was that simple. Where when we talk about the complexity of managing your assets for depreciation purposes, we're not just talking about finance most of the time. We're also talking about tax depreciation and ADS depreciation and state calculations, and then property tax and insurance have their own kind of formula of how they want things to appear and be reported on. And so when we're talking about managing depreciation, it's good to have a system in place and a process in place to effectively manage the assets to get the depreciation correctly across many different places of depreciation. I've also heard within my years of experience from finance that they don't understand that tax depreciation has different methods, lives, property types, and so forth that don't match GAAP. Well, they don't match. Well, they're not supposed to match most of the time. So that's where the complexity component of that is when you're talking about manufacturing, typically they're across multi-locations and stem across multiple states, sometimes multiple countries. And then that's where the complexity really happens.
Right. And Angie, you alluded to property tax, for instance, and the recording of assets to take advantage of optimal property tax reporting. And this goes back again to my property tax consulting experience, fixed asset management, and that combination of, and the issue around the data visibility. So I've seen lots of entries, for instance, in the manufacturing realm where you've got machinery and equipment, $40 million.
Yeah.
And when you get into the nitty gritty of that, and you can set that up as one 12-year asset that you depreciate out. But the reality is that that line that you just installed for $40 million is probably made up of maybe 20 assets, 50 assets. I've seen as many as 200 component assets of that, some of which are not necessarily categorized as machinery and equipment. Some are computer, some are foundation, real property improvements, building improvements, I should say.
Some items to that are expense items that shouldn't even be on there.
Yeah, exactly.
Really
Exactly. So so really tearing apart those entries and putting yourself in position to optimize key areas of reporting and compliance is so critical.
Right. And then Paul, in manufacturing in particular too, most of them grow by acquisition. So then that's when we're talking about a purchase price allocation. And the biggest thing that I've seen is that when someone goes to report on property tax, they're actually reporting on the internal value, which is the new purchase price, not the original price, which is what property tax is asking for. And so if they don't have a proper system in place or process in place that's tracking those differences, then they could really be doing themselves a disservice all around, even with insurance, correct?
Correct. Yeah, that's a great point. You stole my thunder, Angie. I was going to bring that up later on.
I'm just adding to your thunder.
But yeah, no, that's a really big issue in this arena, is not continually tracking that legacy original cost of the asset once assets have been transferred and revalued for book purposes or fair market value purposes onto the new books. So yeah, that's a big gap that we see with respect to inaccuracies on reporting for property tax and insurance, like you said.
Agree. I see it everywhere.
I've been spending a lot of time in this area recently. Yeah, this is a great example of where there's this other silo in the organization called risk management, and they're highly dependent on getting information from fixed asset ledgers so that they understand exactly what assets they have and where they're located and what they are so that they can be properly insured. And the risk management, again, some companies are not big enough to have an actual risk manager. Sometimes it's a treasury function. Sometimes, it's a CFO function. But regardless, somebody's responsible for insuring property. What's important here is two basic things that traditionally fixed asset managers are not tracking. But again, if you want to this is an opportunity to add value to your organization by being collaborative with the person or people responsible for property insurance to start collaborating on updating and keeping current the replacement cost of assets. This has been really interesting of late because property insurance carriers are getting really strict about what information they're going to accept from the policyholders when assessing risk of loss of property. And you have to renew your property insurance every year. It gets renewed every year. So this is an annual process to report replacement costs and report what's known as this set of COPE data, which is more detailed information around the construction of buildings, occupancy, protections, and exposures, vulnerabilities of the building for risk of loss and subject to hurricanes and other catastrophic risks. So again, not necessarily a fixed asset management function, but something that's important to maintain and update and be collaborative with interfacing and integrating this with your risk management system, if there is a system, or just with the person involved in reporting that. And the big advantages of this are from a pre-loss standpoint and a post-loss standpoint. Having this information on the front end and the back end. On the front end, you're putting yourself into do this annual negotiation with the insurance carrier for better coverage, terms, and rates. And to make sure you're right sizing your coverage. That's been a big issue because the replacement costs of late, because of what we've seen in the market of construction costs being highly inflated, although that's stabilized a bit, but what we're finding is a lot of companies are under insuring their assets because they haven't accounted for this increase in replacement cost.
Time and time again, specifically in manufacturing, because of the equipment that they have and the heat intensity that a lot of their equipment gets to, and the places that they're located, where usually are susceptible to hurricanes or tornadoes, those sort of things, or flooding. We see an uptick in that, don't we, within manufacturing as well, where
Right.
being more strict. And if they don't have proper, accurate data, then they may not get enough return to start over.
Yeah, exactly. Yeah, that one quick comment on that. Angie's on the West Coast. I'm a Midwest guy. So the West Coast and the coast in general have been historically much more susceptible to these catastrophic events, just by the nature of being geographically positioned that way. But the Midwest, it's unbelievable in the last couple of years how bad convective storms have been. The increase in that. So that's been a really big loss issue as well. But the other thing I just wanted to mention was in terms of post loss, by having this information at your fingertips and addressing the business interruption aspect of this, it obviously gives you a much better time to recover by being able to work with your insurance company on what you had and so forth. So that's a critical issue on a post loss basis as well.
I just want to plug Sage Software here because we're kind of doing this for them, but within their Sage Fixed Asset Depreciation, there are replacement fields that have been there since back when I started in 1998, and they remain there today. So you can essentially update your records with these replacement values so that you have one report you can just print out of the Sage system to say, here you go. And how easy would that be? Since, Paul, you and I kind of have a theme on these prior slides leading up to CIP, where we're really talking about componentization or discrete assets and knocking these assets down into their own line items. And to me, where I see that most effectively is when we're talking about CIP or construction progress accounting. When we're building the asset before it gets in service is where we start with CIP, but really before we get to CIP, we start at CapEx. So we talk about depreciation, but there's so much more that's going on before we even get to depreciation to even value the assets. So when we're talking about CapEx planning within manufacturing specifically too, there is a whole slew of projects every single year, and we realize you have to get these budgets and all these budgets approved. And if you have a clean subledger that we've been talking about, that makes it easier for the budgeting planning process for CapEx for each year thereafter. Once that CapEx gets approved, then it goes into a CIP process where we're now looking at this project of how we're building these machinery, understanding that a lot of the machinery equipment that's bolted to the floor takes anywhere from 10 to 20 different line items, if not more, or sometimes less. But it also takes time to put these together and install them before they're placed in service. So we are talking about CIP. So in CIP is where things that typically we find in subledgers, either a spreadsheet or an automated system, we're talking about invoices, credits from vendors, images and stuff. Those should theoretically live in CIP because, as you'll probably tell in the Sage system, in any depreciation system, there's only certain characters and there's one invoice field or one PO field. But there may be 10 to 20 to 50 invoices or purchase orders depending on the project. That's why CIP is important. It lives there. Another thing that is important is that since those project proposals, those build outs all live in CIP, that's where we see how assets should be broken into componentization, right? That's where we see different lives and different methods, different classes, types of assets. That's where we see expenses we can just write off right away. Then another thing we've been talking about so far up to this point is communication across those spider legs we've been talking about, right? That's where a CIP component comes into play and really allows us to say, whoever is owning this project, they must go talk to the fixed asset person. They must go talk to facilities. They must go talk to maintenance. They must go talk to tax. How can we better do this? And finance. And it all goes back to CapEx. Where are we on our project spend? Do we need more? What's the timing on this? So these are just other legs of the spider of fixed assets, right? This big bubble that reaches out to all these different places. But a lot of these things spark and ignite in CIP. So when someone has a good process in place for construction and progress accounting of these assets, specifically in manufacturing, because I can't tell you, Paul, how many times I've looked at someone's subledger, reconciled it back to a CIP project, and 9 times out of 10, every project had some missing costs or missing credits on that assets cost that affected the depreciation, which affected the insurance, which affected property tax and so forth. And also, I caught it, which is good because they certainly don't want an auditor to catch it, which is one of the things an auditor looks at when they're doing a fixed asset audit. So if you have a proper system in place and process in place, all that stuff starts to fade away. Clearly, I have a soapbox of CIP, but it's really where it all began, right?
Yeah, no, you covered that one well. And I don't have a lot to add other than obviously I'm in agreement. That's the place to start the effort and to really get things straightened out so that you're not scrambling and losing that visibility as time goes on.
For sure. Yeah, super important. So compliance reporting, when we talk about tracking the assets and depreciating the assets and doing studies and thinking outside the circle bubble of fixed assets and thinking of all these different parts to touch it, we also need to start thinking about how we're reporting on this, not just for regulation purposes, but let's work backwards from regulation, compliance, avoiding penalties. And it really all starts to roll up to the systems we have in place, the processes we have in place, the policies, and the standardization. So many times, because when I go into manufacturers and they grow through M&A, which we already touched base on, that also means they also have typically their own systems, right? And each system is trying to report, and each person in the department is trying to report the same stuff, but it's always different. There's always different ways they're doing that. And when we step back from a holistic standpoint and we look and reflect at what we've been doing this whole time, it really comes down to, well, now we have all this cool stuff in place, but how are we utilizing it to report? And a lot of times there's a huge disconnect. And then that's when we start having problems with compliance, and we're missing our strategies we could have in place to avoid different penalties. Penalties, it could even just be not filing on time because we don't have our act together, right? We're pulling information from all these disparate systems or spreadsheets, or the combination of the 2 or 3 or 5 or 10. Sometimes in larger manufacturers, it could be 100, honestly. And what's happening is we're getting penalties because we're not getting our property taxes out on time because we don't know where all this data is and it's not up to date, or we're not talking to the right people. And that's where we're really come into play, which then segues into your property tax compliance issue, Paul.
Yeah. I mean, there's so much to talk about with property tax compliance. I alluded to the earlier issue of componentizing the assets, not only for book purposes, but for property tax purposes too. You also don't want to report as machinery and equipment in longer lives if you don't have to for property tax, because obviously if you can accelerate the depreciation and the book value associated with the property tax that you're getting assessed on, which is a different depreciation table based on your local assessor, but and that never goes to zero, by the way. That's always at a 20% or a 10% residual. So and even if you have ghost assets, or when you have ghost assets, that's the big bummer, because now you're reporting assets that don't even exist and you're paying tax on them. So there's all kinds of issues. One big issue, I think it's on the next slide actually, is about property tax curves. Yeah, it's at the bottom there. That we've seen and have worked with a lot of clients now in certain states. Certain states obviously don't have personal property tax. The ones that do, there are certain states within the ones that do that allow you to account for functional obsolescence and argue that their depreciation tables are not accurately reflecting what your fair market value of your assets are. So there's a lot of ways to, again, collaborate with the property tax group to stay on top of obsolescence issues and being able to account, whether with internally or with a third party, what those current values are.
What I definitely want to point out is the tax perspective, because I've also sat at a tax department for many years, specifically for fixed assets. Obviously, I mean, that's a duh for me, but where when we're talking about specialized reporting, oftentimes we forget about the tax planning and find the tax benefits, specifically in manufacturing too, where certain states provide additional expense for fixed assets and for manufacturers in particular, depending on where they are. So that also is a big deal for componentization that then trickles down into your specialized reporting, right? So a lot of people forget that aspect. Not everybody has a tax department, but those that do should also be talked to and be shown a little love, because a lot of times that's where they have a big impact, is within their fixed asset subledger. A lot of times tax departments or tax compliance or just tax reporting plays a really big role in finding extra money, finding extra savings within fixed assets itself.
Yeah, one of those, the second bullet here I wanted to touch upon, it goes along with what Angie was just saying, and this is a rare one that a lot of companies are not taking advantage of. And again, it's highly correlated to the manufacturing arena because this is an exemption that's available to manufacturers. Again, it's only in 30 states, but some very, big states. And it's highly correlated to the usage of your machinery for production purposes and being able to allocate how much utilities are being used per machine through an engineering study to be able to take a percentage of the sales tax that utility companies are charging for utility usage and being able to exempt that. It's a very large area of savings that a lot of companies are not taking advantage of.
That's huge. In fact, I didn't even really realize until we had a conversation a couple of months ago about it. And I was like, that is big. Like, for some of these manufacturing companies, that could be really huge and a really big savings that would pay for any service times 5, at least. I would think that's a big return.
Yeah, there's definitely some huge benefits there. Yeah, and just touching upon the top line real quick, the ghost asset idle asset study. No matter how good Angie or someone like Angie is, or someone internally like you all are good at implementing people and processes and systems to track your assets. Just over time, things happen and things get disposed and not communicated, or things get put into an idle category and not reported. And these all have implications across property tax insurance, like we've been saying. So doing that sort of validation study, going out to do the physical, is very important. 3 years, 5 years, whatever the case may be in terms of the volume of activity that you have in your organization.
Actually, Paul, when I say that to people, they have really big eyes and they get scared and they want to run the other way. And I say, no. You can figure out what kind of process, and you could do cycle counting, which isn't as daunting. So cycle counting could be monthly or quarterly, and they could literally just say, if you're, even with the use of the Sage Fixed Asset Inventory, super easy. If they've already been tagged and identified before, cycle counting to implement that is a cinch. You could just take a group of data from like a location or one facility building. You could dump that data out and just do a dynamic inventory, bring it back, reconcile an inventory update, and be done. So people, especially manufacturing, they tend to have a lot of assets, a lot of locations, and they get a little like scared and throw open their mouth a little bit. And so they don't have to feel that way. They could do cycle counting, and if they had the full solution of Sage Fixed Assets, it makes it so much easier. And they could literally do it themselves too.
You are good at plugging Sage. I'm bad. I didn't think about that, but yes, you are correct. That's a good one.
Well, I love Sage. It's a big heart. So, which really caveats into integration with other systems. So my plug was just in time, and I didn't even realize it. So good for me. So we're really talking about too is part of your process and all this, thinking about, they have some really good points. How do we implement that? What do we think about? And we're really thinking about, well, what do your systems have today that can help you? That doesn't always necessarily mean that you need additional systems, but you could, right? So how do I integrate? Are they integrating now? What does that look like from an accountant standpoint, not an IT perspective, but how can I make my life easier as a user to integrate these things, keep communication open, and have this integration so I can then start standardizing these things, right? And these processes. Think about your ERP system. Is it in the Sage family? Is it somewhere else? For the Sage fixed assets, you don't have to have the Sage family of accounting ERP. It would be great because there's like integrations available, but there are, I think, 70 to 80% of Sage fixed asset users have other ERPs, and that works beautifully. And there's other ways to work through it to ensure that it's an easier data stream, and other processes. So think of those things, and don't be afraid if you need a third party reporting system or a third party CIP system, which you'll probably, because there aren't very many out there, but Sage has one. And think about that integration, because a lot of times what I do, which I love to do, is I look at the grand scheme of things, everything holistically from every department. So all legs of that spider. And I really sit and I think, what's lacking in automation that we can fix really fast that has a huge return and gets people done and back into the most important parts of their job. Fixed assets shouldn't be a huge overkill, but it's a big undertaking. So, just sit back and think yourself, where am I having holes? Where are things lacking? And how can I bring something in to work through that? So I think we have a poll now.
Go ahead and launch the poll right now.
So, hello, automation. So let's just dive into that. So Sage Fixed Assets has all these solutions available with all the information, all the reporting wrapped into a nice little bow. A lot of people may not know this, but obviously the depreciation is the breadwinner out here. We don't have to talk much about that, but they do have the inventory piece that does allow for everything Paul and I have talked about as far as identifying ghost assets and the tools to help you identify those, and also to keep communication open across different departments. So the inventory user doesn't have to be the same as the depreciation user, and typically it is not. So the inventory user is someone that's facilities. They might be even IT. When they receive equipment, they type it in, and then they can the accountant can choose to bring in that onto the subledger to calculate or not. And same with out in facilities. And then there's maintenance that's wrapped into the inventory as an option. That's an amazing new tool that floats on top of the inventory. But again, a different user than accounting. So this is what I'm talking about with the fixed asset spider. With all these different legs, everybody can communicate. If you have a system in place that takes care of all these things, that touches fixed assets and all these different players, all of a sudden you just created a communication tool. So a lot of people look at automation, Paul, as just like pressing buttons and keeping data. But I look at it as a communication tool. We're all playing in the same sandbox. We're all collecting the exact same amounts of data and all collecting the same informational fields that goes along with that data. Why aren't we sharing it across these platforms? And CIP, they have the planning module, which is their CIP. That is a beautiful piece of art. And I say that because there's not very many out there specifically that track these projects and then just press a button to send it to the depreciation, that then creates a full circle of reconciliation, because now all of a sudden that asset came from that project. It has a project number from that system, and it all made it over, which is an auditor's dream come true. So, and all the reporting to do that. So it has all of those key functions and features that we've been talking about, reporting capabilities that we've been talking about up to this point. So if you're just a depreciation user, I strongly suggest looking into some of these other things once you take a pause and look back at where your holes are and how you can fill in with other Sage solutions, specifically in fixed assets.
Now, that's just a tremendous way to kind of bring it full circle in terms of this being an enterprise-wide activity, and it's important to be able to add value where you can. So this is, hopefully people are listening and got some good understanding of how they can impact the organization.
Yeah, for sure. If you need a third party to come in and help you see it a bird's eye view without judgment, I could come in. I've done this for 26 years. I love it. I absolutely love it. It's my favorite thing to do, is come in and fix these holes with solutions or processes and work with everybody who's involved in fixed assets to streamline the processes so everyone's playing nicely and together and nothing getting lost. And then that's when you start seeing all the savings and benefits of fixed assets. Paul?
Yeah, and no, I just want to thank Sage again for the opportunity to get involved in this discussion. It was great. I thought it was great. Like Angie's got that whole tactical piece of it, and she's great at it. We've got the whole kind of individual strategic valuation piece of it, specialized studies that we can perform with lots of experience and depth of expertise. So hopefully we'll get a chance to interact with some folks later on.
Yeah, and thank you, Sage. I forgot to say thank you. I have so much gratitude, and I totally forgot.
It goes both ways. Thank you. You guys are amazing.
Never too late.
Yeah, the insights today have been fascinating. I appreciate everyone who has been here the whole time with us. And Paul, I really appreciated the tips on little known tax breaks. I hope everyone else who is listening took something from that as well. And Angie, fixed asset spider legs. I'm seeing a whole Halloween theme infographic. So thank you for that idea. We are at time, and I want to be sensitive to that, but I also want to open the floor up to questions in case anyone has them. And I want to say thank you just in advance for anyone who has to drop. We appreciate your time. We hope that you get in contact with us. You have a copy of this PowerPoint presentation in the handout, and you'll also receive the recording after the event. And you will have information on where to learn more on that last slide. So let's open it up for Q&A.
I was going to say, I know we're at time, but I did get one come through. It was around more, when do you need to really value your assets?
I can jump on that. There's so many different times, depending upon different economic factors affecting the organization and or how proactive you want to be in maintaining current updates of different types of values besides book value for all the reasons we talked about today, whether it's for property tax reporting or insurance reporting, asset impairment. We didn't touch heavily on that, but asset impairment analysis is really important. So yeah, it could be almost at any time for various objectives and or all the time because you're just wanting to maintain good data to analyze.
Yeah, and I'll touch base from my experience in different economic times, impairments seem to have an uptick. So just making sure that your machinery equipment, especially if it's not producing anything because of whatever your industry is within manufacturing and what you're making the parts for, if there's no movement there, and then you might want to consider getting an impairment study specifically too, so that you're not overpaying on insurance, property taxes, all that stuff. You can pause depreciation, anything like that. So for idle assets, that's a good time, just like Paul said.
Yeah, and just for accurate financial reporting as well on that.
How often should a physical inventory of assets be done? Annually, less, more?
I'll take that for a sec, Paul, and then you can chime in.
Sure.
It depends on your volume. So how many do you have? How much are you putting in service? How much, how many, it's a cycle. So everyone has a different cycle, but if you have high volume, I would suggest every year. And again, it could be a cycle count. It doesn't have to be anything else. If they're moving a lot, then there's probably some assets that are getting lost along the way, specifically disposals. I've even seen sales like for charity donations, totally just like forgot about them, right? So you'll want to do that. If you're doing a lot of transfers, so a lot of location transfers, intercompany even, then I would definitely do that a little bit more frequently because you need to understand and where they are, and you need to change their location so that they get on the right group of assets to be reported on across all those spider legs. So if you're not having as much volume and you don't have very many locations, a 3 year is okay. But these days, I like cycle counting. It's just for lots of reasons.
All right, well, I think that is our last question. So I just want to thank you once again, Paul and Angie. I've just really enjoyed the insights, and I hope that our listeners have. To everyone, I hope you have a great rest of your day. Get in touch with Sage Fixed Assets, Angie, or Paul if you have any questions.
Thank you so much for your time, everyone, and Tani and Whitney, thank you, and Paul. Thanks.
Thank you, everybody. I appreciate the time. Thanks. Have a
Take
good
care.
day. Have a great day.